Hey, Saretsky here. As always, Canadian real estate market update with a particular focus on Vancouver. For getting sort of value entertainment out of these videos, all I ask you hit thumbs up and subscribe. Questions, comments for those below. Figured I'd pump out a video here. I'm just actually away visiting family in Palm Springs, but I wanted to put together a sort of year-end show. We missed last Saturday, obviously following on Christmas, the first video I've missed, I think in 4 years. Just didn't have it in me on Christmas Day. But I want to put this video together for you, filming on New Year's Eve, again, away. But what I wanted to do is obviously, we're kind of a slower news week sort of thing. So really just wanted to put together sort of a year-end summary of the Canadian housing market, some of my thoughts in terms of where I see things heading in the year ahead, policy-making decisions, et cetera, et cetera. And I think it's important to sort of frame that up first and foremost from where are we right now, right this minute. I think the big thing that I always focus on, there's so much, scapegoats and, lack of understanding of the finance. You have to understand that the financial system, the monetary system, understanding how global markets function, economies, they're very complicated topics, and most people don't care to learn them, and they're complex systems. So it's much easier, especially for mainstream media, to put out narratives, in my opinion, such as, oh, there's a shortage of supply, oh, it's these investors that are driving up house prices. And it's like there's so many larger underlying macro themes that are really impacting the housing market. And the one that I prefer to focus on is ultimately bank lending, because at the end of the day, it's like everyone knows in Canada there's a lot of leverage in the Canadian housing market, and in order to sort of maintain or sustain house price valuations, like most people are taking out a mortgage to do that. And so in order to basically have growth in the housing market, you need banks to be lending money. And so I'm always looking at, personally for myself, I'm always looking at bank appetite, risk appetite, what's their lending framework looking like. And so one of the ones that I'll highlight here is we've known throughout the pandemic, banks are publicly traded entities, right? They've got shareholders, their job is to maximize profits. They have to continue to lend, right? They need to generate growth. They need to, derive revenues for their shareholders. And so when you're faced with an unprecedented pandemic and economic shutdowns, you have to look at the banks and say, okay, well, where are they gonna lend money to sort of get growth? And then obviously, if you look at the business segment of the economy, you're like, well, that doesn't look very appetizing. Got all these, governments shutting down economies, which ones are gonna survive, which ones aren't. And so they kind of shy away from that. I mean, obviously we know, like, you look at some of these corporations, office space, et cetera. Are you gonna, as a bank, are you lending towards the office sector? Yeah, probably not. Retail, that didn't look overly appealing. And so where all that money flowed was actually in the residential housing market. And part of that was actually incentivized not only through the banking regulator, OSFI, with a lot of their policy changes, but also through the federal government, guaranteeing some of these loans. We had the mortgage deferral process. And so you look at it from a bank's perspective, you say, well, listen, like if we lend, 80% loan to value, someone's got 20% equity in a property, there's not a whole lot of risk there, particularly when really, right or wrong, the residential housing market, it does have a government backstop. It does have a government guarantee, not to say that prices can't fall more than 20%, but the governments will come in and support it because it is systemically important. And so we can look at residential mortgage lending in Canada. It's right now running north of 10%. This is the highest pace, in over a decade. So all the loan growth is showing up in the residential housing market. And so you might wonder, like, well, how is this happening, right? I mean, don't we have a mortgage stress test? Are people getting around that? Is it foreign money? Where is it coming from? Like, as we know, the borders are shut. What we're seeing is actually from the banking regulator, they're actually making exemptions. So most of the big banks today, the majority of new loan originations are getting, they are going up the chain of command to get variances on their borrowers. So borrowers that are, not quite fitting in with debt servicing ratios, they need to get what's called basically an exemption. So they have to go up the chain of command and they have to get an exemption. And so what we're seeing is an increasing majority of new loan origination actually having to go up the chain of command. And so your first question will be, well, doesn't OSFI, for example, say something? Don't they say, hey, hold on a minute, why are you guys approving all of these loans? In reality, these programs that the banks release and to get these exemptions, they actually have to have the blessing from the banking regulator, as in OSFI. So in other words, to summarize, the stress test is more just kabuki theater. It exists, it is there, it is a framework. It makes it look to the public that the banking regulator is acting tough on housing, but in reality, they behind the scenes are approving these programs that basically get around the stress test. And that's why you have residential loan growth running at decade highs. And that's driving the strength in the housing market. If house prices go up 40%, I can tell you the wages have not gone up 40%. So what you're having to do is you're basically taking on more leverage. And we're seeing, anecdotally in the housing market, we're seeing more and more stories through mortgage brokers that the qualification scores, for example, of borrowers is starting to get worse. We've had a 2-year housing bull market. In fact, if you show this year in 2021, we're on pace to beat the previous record by about 21%. So 2021 has been this unprecedented, unbelievable amount of home sales. And that pulls a lot of this demand forward. So you have to wonder, okay, well, where's the next buyer coming from? You start to run out of these qualified buyers. So that's kind of something I'm looking at in 2022, is how regulators are going to act. Because right now you've got loan growth running higher than it did pre-B20 stress test, and there's not any talk whatsoever of a stricter stress test coming out. And so this is something that I'm focused on, because at the end of the day, people always say, oh, well, if you're RBC Bank and you think the housing market is frothy, or prices are too high, or you're running out of less qualified borrowers, why don't you just pull back your lending? It's not that simple. You have to think like a bank CEO. You don't want to lose market share. RBC doesn't want to lose market share to TD Bank, and TD Bank doesn't want to lose market share to Scotia Bank. And so what they do is all these big 6 banks basically get together and they basically they lobby regulators to basically say, hey, listen, I don't want to pull back on my loan growth, but we actually kind of think this is kind of crazy. So we think you should bring in this policy so it pulls everybody back at the same time. That is in reality how the banking system works and how the housing market works. And when you really unpack it further, let's logically think about it. Right or wrong, is there any government agency, what entity in Canada has incentives to entice lower home prices? Is OSFI, does it benefit OSFI or the Bank of Canada or the federal government, which relies on tax revenues, or the provincial municipal governments that rely on property transfer taxes and annual property taxes? Mortgage brokers, realtors, everybody's incentivized to support the housing market and push prices high. So when you hear all this grandstanding about politicians coming out, oh, we care about affordable housing, we're going to bring in this new policy, and we need to get housing under control. It's none of them are actually financially motivated to bring valuations down. I mean, as a politician, you might get elected on hey, housing affordability, but once prices drop, let's say 10-15%, and economic GDP growth undoubtedly slows and the economy contracts, it's very difficult to then get reelected on a shit economy. And so this is basically, you just have to understand that that's kind of the game that's being played right now. So what I'm looking forward in 2022 is I do still think we're going to have a policy measure coming out from the federal government. We know that the housing minister has been lobbed to bring in. I think it's going to be a policy that is not going to have a lot of teeth. So you could be looking at a national foreign buyer ban, which they've already talked about, which, I mean, there's so many ways to kind of get around. They haven't really been moving the market at all in the last 18 months. I think you could be looking at some sort of speculation tax where, hey, if you don't hold your property, okay, so right now we've got the first time, the home ownership primary residence tax exemption. If now you buy a home and you resell it, let's say for a profit in 3 years, will that exemption still apply? My suspicion is if they're going to bring in a tax that targets their primary residence, they might try to angle it that we're going to target the speculators, which means that, hey, if you bought and sold your home within, say 2 years, you won't be applicable for that exemption. So I think that's kind of something that I potentially see coming down the road. I think the Bank of Canada squeezes in a couple hikes in 2022. Again, I think they're just going to get stomped out. They get 2, maybe 3 rate hikes in. There's just the global financial system is just way too levered. But I am watching it closely. I think the Federal Reserve, which drives monetary policy, is slowly trying to drain out liquidity from the system, or tightening liquidity, I should say. I think the other thing is that you're probably going to see a pullback in fiscal spending at the same time. So I think it's going to be a very interesting market. I actually think that the detached housing market, which has outperformed in Canada, particularly in the suburbs, I think is going to probably be a bit of a lag. I just think prices have gone up, 25, 30, 35, 40% in some of these markets over the past year, that you're actually going to see the laggards, which is the condo market, outperform. I mean, if you still look at some of these downtown markets, downtown Vancouver, downtown Toronto, in downtown Vancouver, these condo prices are still down 10% roughly from their 2018 highs. Despite the other parts of the market moving up 30 to 40% over the past year. But I also just wanted to highlight again, to kind of round things out here, just some great charts. I subscribe to a service for real estate professionals through my buddy Ben Rabideau, plugged his newsletter Edge Analytics. But just taking some snippets from that, again, there's going to be some political pressure, like I said, to bring in some policy measures. Just to give you an example, in November, year over year, we had 25% year over year home price acceleration. This is the fastest pace of growth we've ever seen on record. Again, goes hand in hand with bank lending, credit creation. You've got your typical house in Canada. So as per the MLS Home Price Index, the MLS Home Price Index measures the price, the typical price of the typical home in Canada. So it's not an average house price, which will skew towards larger properties or more expensive properties. This is just taking the typical home, using an algorithm similar to the US's Case-Shiller Index. It's about as accurate as you're going to get. It's hedonically adjusted. The typical home in Canada this year has risen $160,000. $160,000 has been added to the typical price of a home in Canada. That would require, now just this is important context, that would require $270,000 of pre-tax income to basically earn the same amount, right? Because in Canada, as everybody knows, you kind of have these low property taxes and very high income taxes in Canada. So you're ultimately incentivized to buy real estate, and you're decentivized, to work as a laborer. So very high tax rate. And so that why it kind of always irks me, because you have all these these groups, about affordable housing and The solution seems to always be more tax, just tax them, tax the real estate investors, tax the homeowners, tax. But I think, as it's been proven time and time again, the government is the single worst allocator of capital ever on earth. Been proven time and time again. They don't run balanced budgets. They aren't a business. They're not a non-for-profit. They they spend more than they take in, and they are not good allocators of capital. So increasing property taxes without reducing income taxes is a terrible idea. Now, I'm all for reducing your income tax rate and increasing the property tax rate. That, in my opinion, works towards a more productive society. But I mean, let's be honest. So when was the last time the government in Canada reduced income taxes? It just doesn't happen. So what's going to happen is you're advocating just for higher taxes in general to go to an entity that has been a terrible allocator, and I would argue has been a huge hindrance to, I mean, let's be honest. I mean, government sets policy, and they have created or enabled the existing housing framework that we're in today. That we have record housing unaffordability and record high house prices. That's policy that's been set by the government. So, asking them or depending on them to come in and then fix that solution, to me, is a bit of a head scratcher. And so, that's basically kind of what I'm looking at this year. Couple other notes I've been talking about before, like I said, just to give you a framework. We know where mortgage originations are. That's been driving a lot of the economic growth in Canada through the housing market. There's another report out where Ontario now makes up 50% of all residential mortgages outstanding in Canada. So Ontario is basically 50% of the entire mortgage market. So if the Ontario housing market starts to crack, that will be your first sort of sign that the rest of the housing market will likely follow, unless that lending is offset. So you have to basically ramp up lending in other provinces, right? And so this is kind of my bullish thesis that remains in Alberta. Is that, okay, as we start to look forward, we had record, like as we talked about, right? Record home sales, we're starting to thin out on qualified borrowers. Where are these qualified borrowers going to come from? So if you look at it, the qualified borrowers are actually in Alberta. So I think that the bank lending, more importantly, is going to shift. The bank lending is going to shift to Alberta as they look for clean balance sheets. And of course, we know the Canadian government has been hell-bent on hitting their immigration targets. Recently hitting the 400,000 immigrant mark, which they promised they would hit. They have indeed hit that for this year, because again, you need clean balance sheets to come in and continue to support the housing market. So that's the macro framework around housing. It's very simple. Yes, there's nuances with home building, again, which governments have hindered. You look at the municipal governments why in the city of Vancouver to build, for example, I'm going to run you through this process. Why in the city of Vancouver does it take, on average, 12 months to get a permit to build a single family house? Why does it take 12 months? I mean, it's relatively straightforward. It's 4 walls, it's a roof and a foundation. It shouldn't take 12 months. If you go to the city of Calgary, where I'm currently building, takes, on average, you're looking about 4 months to get a permit, start to finish. So why is it an extra 8 months? It's just additional government red tape, bureaucracy, stifling housing supply. And so these are the kind of things I'm looking for. So I think, again, Alberta, we can see with the housing market actually tightening up, that I think that, for the first time in a decade, you've had double-digit price appreciation in the Calgary housing market. So that's a little known secret. I think the oil and gas sector looks very positive, in my opinion. I think someone was pointing out the other day on the Twitter sphere there, Larry McDonald, Bear Traps report that oil and gas exploration, new exploration, is the lowest it's been since the 1940s. In other words, these oil and gas companies are not being incentivized to go and explore for new oil and gas, and so you're going to run into these massive supply shortages as demand actually continues to rise, despite the sort of narrative that it's falling. And so the outlook, arguably, for oil and gas prices is higher, and I think that's going to benefit the Alberta economy and other parts of Canada. So as always, I hope that helped. Love to hear your questions below. I know everyone's got questions around the housing market here, so that's kind of from a national level. Try to keep on top of these things as best as I can, but Happy New Year to you and your family. Appreciate all your support in 2021. Lots of big things to come for this channel, for this community that we're building here in the new year. So as always, take care.